The financial world can seem like a labyrinth, especially when it comes to securing your money beyond your home borders. In 2025, over $12 trillion is held in offshore accounts, and much of it is completely legal. Yet, most people make costly mistakes simply because they don't know the hidden rules. Ever wondered why some banks beg for your deposit but won't insure it? Or why opening an account in a tax haven could get you blacklisted in your home country even if you've done nothing wrong? So in this video, I will discuss some offshore banking rules no one tells you in 2025. Secrets that even your financial advisor might not know. And trust me, some of these insights, like why a bank being too eager to take your money can be a massive red flag, will completely change how you approach international finance. 1. Your local bank isn't your global partner. Have you ever noticed the sheer frustration of trying to use your domestic bank account while traveling or living abroad? You might be unaware of the fundamental truth. Your home country bank isn't designed to support a cross-border lifestyle. It's simply not set up for frequent international transactions. The sooner you establish an account tailored to your global needs, the more you'll avoid endless headaches and financial friction. However, simply opening any international account isn't a silver bullet, which leads us to our next crucial lesson. 2. Not all offshore banks are created equal. Many people mistakenly believe that all their banking problems disappear the moment they open their first international account. If only it were that simple. There are far more efficient and less troublesome banking options available. You must meticulously choose where you open accounts. This foresight will spare you immense wasted time and effort, allowing you to focus on truly suitable financial partners. And before you even begin an application, clarity on your own banking needs is paramount. 3. Define your banking needs. Before you apply, imagine buying a tool without knowing what job it needs to do. It sounds absurd, right? Yet, many approach banking this way. Always confirm that a bank's features and policies match your specific requirements before opening an account. Choosing the wrong bank can result in not only inconvenience and unexpected expenses, but also serious operational setbacks. Even the perfect fit today might not work tomorrow. The banking landscape is constantly evolving. Planning for flexibility is just as important as planning for function. Even if you find a perfect fit today, the banking world is dynamic, and preparing for the unexpected is vital. 4. Always have backup accounts. Could your main bank account suddenly be closed, leaving your finances in limbo? It's a very real possibility. Banks often de-risk by closing accounts that no longer align with their policies based on citizenship, income source, business location, or industry. For instance, Mercury Bank's partner banks shut down thousands of accounts during a major de-risking move, leaving many businesses stranded. The key lesson: always maintain backup accounts to ensure uninterrupted access to funds if your primary account is suddenly closed. Beyond institutional policies, sometimes the strongest signal comes from your own intuition and gut feeling. 5. Trust your gut. Have you ever met someone and instantly felt uneasy about them, even if you couldn't pinpoint why? That same gut feeling applies to financial institutions, and it's a powerful indicator you should never ignore. Trust your instincts. If a bank raises any red flags for you, walk away. It could save you immeasurable stress, significant financial losses, and potentially crippling legal fees down the line. And speaking of financial considerations, sometimes paying a fee can actually be a smart investment in your banking security. 6. Embrace fees. It's a universal truth. You pay for banking services one way or another. Banks promoting fee-free accounts often generate revenue through less transparent methods, like riskier lending or internal market activities. While reputable free accounts exist, they may not suit those seeking secure wealth storage or sophisticated asset custody. Conservative banks that rely on clear fees and stable operations tend to offer greater security and compliance. Don't dismiss banks that charge fees. Those fees often fund stronger protections and better service. A reasonable fee is a smart investment for peace of mind and long-term financial stability. And once you've chosen a bank, remember that building a strong relationship with your banker is key to navigating the system successfully. 7. Your banker is your ally. Many bankers are supportive. It's in their interest for your account to function smoothly. Acting as internal advocates, they coordinate with compliance teams to help facilitate your transactions. While they can't bypass strict AML/BSA rules, they aim to assist. Still, their primary loyalty lies with the bank, so proactive communication is key. Discuss documentation needs before large or unusual transfers, and clarify expectations for high-value transactions up front. Keep them informed of any significant updates. What do you think about these offshore banking rules? Comment and let us know. If you found this video useful and informative, then don't forget to like, share, and subscribe for more helpful videos. See you in the next episode.